Good afternoon. This is Larry Adams, Channel FSR, and today I'm joined with Matt Bennett of Bennett Consulting, our expert in the field for a grain market. And today we received another report out today. Wasn't that right, Matthew?
Yeah, the USDA issued their April supply and demand. So last week we talked a little bit about the acreage and quarterly stocks report. This week we're essentially going back to supply and demand, seeing what the demand structure looks like, what your carry out levels look like. And so as far as corn's concerned, I think we're all under the understanding that there would be some adjustments made due to the fact that we've seen such a major shock to the energy industry and ethanol industry, due to an oil price war, and then of course some of the issues we've had here in the U.S. from a demand perspective. But so basically, what the USDA did was they came in last month, in the last 3 months actually, the USDA for their supply and demand was at about 1.892 billion bushels for carryout on corn, which is a decent amount, but it's nothing earth-shattering. Now, as far as what they went to today, they went to 2.092, so they went up 200 million bushels. To get there, what they did was they actually lowered your ethanol by 375 million bushels. So ethanol demand went down 375 million bushels. That seems like a pretty big adjustment, and it is. I mean, there's no question it's a very large adjustment, but in all honesty, it could have been maybe a little bit more yet. And so I think there's going to be a lot to learn on the May report. Obviously, they increased demand somewhere else, and so they increased feed usage. And so what they did was they said, actually, we feel like feed usage needs to go up. And I've thought all along that feed usage was too low. And I've been pretty adamant about that. And so the nice thing is that we got some of this ethanol grind loss, if you will, back as far as feed usage is concerned. I think that makes sense. Is that, whenever you grind ethanol, DDGs is one of your byproducts. It's ethanol and DDGs. People like to feed DDGs to cattle especially. And so when you take that out of a ration due to the fact that we're not grinding as much ethanol, you've got to insert something else. And I think the USDA is well aware that corn is probably what most people are going to use, especially considering the fact that right now corn is the cheapest feed grain in the world. So due to the protein that you can get out of it, what you're paying for it, it's a pretty good deal. Not to get too windy, but as far as soybeans are concerned, the soybean report was just a little bit unfriendly as well. 480 million bushels last month for carryout. We were at 425. And so essentially what the USDA did is they said, exports are going to be down 50 million bushels. Then they made a couple other small adjustments, but that was a necessary adjustment. We really had a hard time exporting soybeans this year, especially the value of the real is just so cheap compared to the U.S. dollar. Even though the U.S. dollar had just cheapened up at times, the real continues to stay weak. People just don't want to invest. They don't see Brazil as being a stable environment to invest their money. And so that's part of the reason why the real continues to stay cheap, keeps their beans cheap on the world market. That's going to inflate what our stocks look like because we can't get beans exported like we'd like to. So bean report was a little bit unfriendly as well. But, the nice thing is, as we speak, recording this after the report, we're actually looking at corn and bean markets up a little bit. So we didn't get hurt too bad, even though the news you'd struggle to say it was a bullish report.
Why do you think the markets are doing like that? Like you said, up a little bit. Why do you think that? Why did they react like that? I mean, we're getting close to the weekend. People taking some money out. What was going on?
Well, you're coming on a 3-day weekend for one thing. I think another thing that you've got to consider is that everyone's been really bearish for a while. Bearish everything, really. And then so you've seen the crude oil market be able to bounce here in the last week or so, actually about 12%. And so you would wonder, was the ethanol and the corn market you'd be able to bounce those types of percentages as well? First of all, whenever you shutter an ethanol plant, it's really hard to get it back up and going. So sure, it's going to be tough to assume you could see that kind of a bounce out of ethanol, first of all. Second of all, corn so heavily reliant on ethanol that it's going to be a struggle to bounce there as well, especially considering 97 million acres forecasted. So why are we rallying a little bit today? I think that it was maybe a little bit oversold. People got too bearish. For the time being, I think people are probably that have been short the market. buying their positions back, simply taking profits, saying, hey, you know what, I'm going to go into the weekend with some money in my pocket, 3-day weekend, don't really want to risk what I've already made myself, and, live to play another day.
Sure. So I've been around the state this week in Illinois, and from south central Illinois out to north central Illinois. And there's some pockets in there that still actually aren't farming, but there are some places that were farming this week. And with the weather forecast like it has been doing yesterday with the cold front coming through, which kind of put the brakes on a lot of corn planting. But I talked with some guys actually again this morning, and they are moving forward as soon as it dries up to continue planting beans, actually. What have you noticed actually in your local area around there in central Illinois yourself too?
Yeah, and so, we started farming there Monday morning, corn and beans, planted a decent amount of corn and beans on Monday and Tuesday, decided that we would leave the corn planter in the shed on Wednesday, due to the forecast, of course. We didn't want to put too many eggs in one basket, I guess. Lots of folks in my immediate area were planting both corn and beans. We're going in the ground. Not everyone was planting both at the same time, mind you, but there's a lot of corn that got put in the ground actually Monday, Tuesday, Wednesday. Obviously, the cold temperatures scare the heck out of you. I understand that. And that's part of the reason why we've tried to hedge our bets just a little bit. The nice thing is, the ground's working like a dream. And so what we're going to do is we're just going to continue to work ground, and then if we do get an opportunity and, we can just go ahead and plant right into that. Bottom line, we chiseled almost everything last fall because we had a really good fall to get work done. And we all know that none of us had a really good fall 2 falls ago. And so we've got a lot of stock ground to level. And so we're just going to keep right on working ground. And, I don't know, I would assume we'll plant some beans tomorrow. A lot of it's going to be dependent upon that forecast. But I'm not going to plant probably a whole lot more corn just yet, personally. I think I'm going to kind of hold off a little bit due to the temperature situation. As we all know, 2 or 3 days of running, and most of us can plant most, if not all, of our crop. And so I guess I got to be cautious there again, just trying to spread my risk out there as well.
Yeah, so thinking about that is, there's some certain areas that aren't growing. Guys down in Texas and Missouri, they've planted a lot of crops. Talking guys in the Dakotas. So when you talk to these guys like that, and even thinking about yourself, when you get more acres in, does that get you more in a comfortable spot to go into, marketing schemes or marketing ideas for people?
Yeah, and that's a good question. I think I'm going to start out by answering it this way. One of the most sleepless nights that producers have is the time frame from when it's planted to when it's up. And so I think your crop is up and you have even emergence, there's no question that your marketing plan can start to get a little bit more comfort level as far as how aggressive you might want to be. Now, as well as I do that there are certain parts of the Corn Belt that are always 10 days to 2 weeks away from a drought, ruining their whereas maybe in central Illinois, we can go a little bit longer due to our soil type. So I think that it's going to be regionally specific. A producer that gets a full stand of corn with a full soil moisture profile in central Illinois, middle of May is going to feel pretty good about advancing their sales. But sitting right here in April, could we get some sort of a bounce if we have weather issues? Of course we can. But at the same time, last year, we had one heck of a bounce, and then we still raised a pretty decent crop. So we've got to be careful to assume we could see that sort of a bounce. To get that level of a rally to give us a chance to really get aggressive on sales, I think we're going to need some Brazil weather. Maybe the safrinha crop has some issues, and as of today, the USDA said that they see no issues there, and that their crop's still record, they're forecasted to be over 100 million metric ton for the Brazilian corn crop. So no doubt the USDA still sees that they should have normal production down there. If they don't, we could get a rally though.
I found it kind of interesting too, the last couple of days, talking with some guys that, with the weather like it's been, that they did get the ground worked and they're thought about some corn on corn acres. However, they're, were kind of a little more nervous about, they didn't want to didn't get their anhydrous put on. And so they didn't want to go in there and now put the anhydrous on, wait a couple of days. So they just went back in there and planted beans back into it and kind of changed the rotation up a little bit, obviously, went to the back beans world. Have you heard much of that, the guys you're talking about, across the Corn Belt?
Yeah, I've actually heard a lot of acres that have been planted to beans that were originally thought or recently thought that we're going to go to corn. I don't know how to say, a lot. I just know that I've talked to probably more than a dozen people that are going to be switching some acreage around. And I think what it boils down to, I saw something interesting that people that watch this might want to look at. Gary Schnitke from the University of Illinois put out, an update as far as the budgets for farm doc. And he said on your highly productive Illinois farm ground with an average cash rent of $275, he ran the budgets at today's types of prices.
Okay.
For corn, you were looking at a negative $100 an acre, and that's if you're 100% cash rent. Of course, we know most people aren't 100% cash rent, and if they are, their average probably isn't going to be that high. But as far as soybeans is concerned, the average was around a negative $25, and so obviously beans looked a little bit better in that particular scenario, but that was figuring no MFP money and no crop insurance proceeds. Okay, so that's something to go listen to. I think that guys and gals are going to find interesting. But I guess what I'm saying is people are looking at that. They're looking at that saying, you know what, maybe I'm going to try to minimize my risk by minimizing loss if this market doesn't offer me an opportunity. Now, I personally feel like we're going, like I said last week, we're going to get a rally. I just don't know where the rally is going to be from. But at the same time, are we going to get a chance to get into the black this year? A couple of different things come to mind for me. Yeah, you typically get an opportunity like that. A lot of times we lose sight of what we were looking for, originally, and we get to when we see that rally and we just want more. First of all. Second of all, you and I both know, and everybody watching this knows, we've produced some yields the last few years that just have blown our minds. And so we've got to be cognizant of what we're able to produce. We can produce our way into profitability sometimes, but we also have to be keeping very close tabs on what we're doing from a marketing standpoint.
Right. $2 corn at 300 bushels doesn't add up very well. So, you just got to make sure you have a scheme there to figure it out. So, So after last week, obviously, after our last podcast, you had some questions come in. Could you address some of those and some answers for some of those?
Yeah, we've already kind of touched on one of them, but I'll just, I've actually been asked this a couple of times. The other one, I guess we'll just highlight this one. People keep asking me, how do you figure, what is a good level or a good way to figure out when you're going to switch from corn to beans? Obviously watching something like I talked about before, but on the website, we've got the profitability calculator. And I hope that people use that. I know there's a lot of tools out there that help you identify what your break-even price levels are, what your profit margins look like. But one thing is for certain, this late in the year, you've got most of your costs are quantified. You pretty much know what your cost structure is going to be to produce that crop. Now, obviously, you might have some flex on fungicide later on, insecticide. The need for it might not be as great some years as others. We know that. But 95% of your costs are quantified at this point. So there's no reason whatsoever not to have a really good idea of your cost of production. Now, as far as your break even, that's going to be pretty dependent upon what kind of yield levels you're forecasting. Planting early in the year like this, typically for us, has meant that we have a little bit better opportunity for really good yields. And so obviously the spring looks like it's going to be challenging again, but at the same time, I think that I'm going to, if I do get my crop up and going, here in the next couple of weeks, then my yield forecast is probably going to get bumped up, maybe 5%. If we get 2 months down the road and again, got great moisture, it's going to go up maybe 10%. But we have to know where we're at as far as profit margins go. And then what can you live with? And so if you're going to switch acres, from corn to beans, once again, and I know we talked about this a little bit last week, whenever I'm forecasting the yield levels and I'm trying to come up with my profit margins, I don't want to sell myself short. Now, what I'm saying is this: whenever I go to the bank to get an operating note, I've got to be very realistic and pretty conservative because I don't want to forecast a 250 bushel yield at $4 corn. He's just
right.
At me, or she's going to laugh at me. I got to do something conservative and realistic. Yes, we can have 250, but are you going to have that every year? Probably not. And so, but whenever I'm looking at these budgets, I want to be looking at what kind of yield am I forecasting? What am I fertilizing for? What is it that I'm pretty much expecting? And so I want to plug those yields in, and that's how I'm going to be able to make a decision as far as whether I'm going to switch around or not. I like going corn to beans, beans to corn. Yes, I've had some very heavy corn on corn years before, but typically those have been years, when we were looking at price levels a little bit different than what we're looking at today. A lot of it's personal preference, a lot of it's your soil type, and some of it, unfortunately, is going to be your financial situation.
I understand. Any other questions you had, or is that pretty well wrap it up, Matthew?
Yeah, I mean, we pretty much touched on the other when we were discussing how this is all impacted by the report. But yeah, I think for the most part this week, we could see a worse situation what we're in.
Sure. Agreed.
Like this, some years you would see the markets sharply lower. We're looking at a lot of money flow at this point. Money is looking for a home, and stock market continues to go back up. I mean, we're at 500 and some points. And if we started doing this morning, 23.5 or so. That's really nice to see for those of us, that's got a little bit of money invested, that we're looking at 18,000 just a few days ago. Seeing renewed confidence, I think, in the economy, and that's a really good thing to see. And I do feel strongly that if you continue to see a plateauing, if you will, and a light at the end of the tunnel on some of the issues that we've got from the health standpoint, I absolutely think that the financial health is going to come around as well. And I think that you're going to continue to see these markets be able to at least find some sort of a floor. As far as the ag markets go, a lot of it, again, is going to be dependent on what kind of spring you have, what kind of forecast we see moving forward on production. There's a lot going on here, but again, it could be worse.
Absolutely. For next week's thing, how can they get a hold of you, Matthew?
Yeah, I mean, Matt Bennett at hlkagency.com. I know a lot of people that watch this have my contact info, but the other thing, just go on Twitter, shoot me a direct message at Chief321.
Matthew, thanks for the time again today. They also can reach me at AgAdams99 at Twitter also, and look forward to next time getting together and having a conversation. Thanks again.
Yep, thanks for having me.